What's up? What's up? What's up, everybody? Can you hear me well? I'm doing a new thing. I'm trying to go live on Instagram and on all my other social media. So I'll be looking at both quick cameras. I haven't figured out how to add the Instagram to my streaming platform, but we'll get there. Um, can everybody hear me? Can you hear me well? Um, Send me a message. Let me know everybody can hear me. Well, if you have not seen me before, or don't know who I am, my name is Jeremiah Davis, aka the Funding Coach, um, and I'm coming to you Black Label Friday. Black Label CRM is the most automated white label business credit building, becoming bankable building, business building, and loan processing, business loan processing software on the market. Black Label CRM, if you want to get into business funding and helping business not just build business credit, but become bankable, there is a distinct difference. Okay. This is part two of a series I'm doing called Understanding Business Funding. Now, business funding is very nuanced, and why it's a nuance, because it's not regulated. All right, lenders can do what they want. There are some standard guidelines that we can follow that kind of cookie cutter for any business type, but there are the various nuances. So last week I covered um, the four legs of becoming bankable, right? So on the four legs of becoming bankable, um, you know, one of the legs, I'm just going to recap really quickly, is lender compliance. There are 20 items in lender compliance that need to be completed. Okay, these are your 411, your business address, your NAP validation, your business bank account, all the business foundational things, right? But there are 20 items in lender compliance. I'm not going to go over all of them. You can go back to the YouTube or the Facebook pages and find those. Search for becoming bankable or lender compliance video. I've done that several times. That has not changed. The same 20 lender compliance items that you need today, you needed 2 years ago, or you needed 20 years ago. Okay, because these are the guidelines. For example, one of the guidelines in the lender compliance category is the National 411 directory. Now, nobody uses the National 411 directory. And quite frankly, this afternoon I was riding around town and the police have 411 tip line, right? An informational tip line. You can dial 411 in this area and leave a tip for, like, active crime in progress or something like that, or reporting a crime. But for business funding and business credit, you need to have your business listed with National 401 directory because lenders and creditors are looking at that. That's one leg of the table to become bankable. The second leg is a low five bank rating score. A low five bank rating score means that your daily average balance in your business checking account is $10,000 or more over 90 days. That's over 90 days. Okay. So you don't have a low five bank rating score, right? Say you're in the fours. That means your daily average balance is between $1,000 and $10,999. If you're in the threes, that means from 100 to $999 is your daily average balance. Okay. So I have a deal on my desk right now. They do 150 average 30 to 40, $150,000 a month in revenue, but their daily average balance on their bank statement is less than $5,000. So they're not going to qualify for some of the premium loan products that with the low interest rates, the monthly payments, and the longer terms because they don't have the low five bank rating score. Okay. The third leg is comparable credit. The business needs to have established comparable credit. What is counted as comparable credit are vendor accounts, trade lines, department store cards, credit cards, lines of credit. In the software, we have a step-by-step process to show you how to build comparable credit in a rapid format. So in 4 to 6 months, you can have $200,000 in. Then you can go into a bank and say, I want $200,000 loan. You have to have comparable credit equal to the amount that you want to borrow. Okay. And then the fourth leg is the SBSS score or the Small Business FICO score, right? This is what lenders in the SBA look at when you're applying for an SBA loan or a business term loan or corporate only financing, right? And they're looking for a 160 or higher on your SBSS score is your Small Business FICO score. And it's a combination of a 680 plus credit score and a 70 plus Paydex or a intelligence score on your business credit profile. So that's what we covered last week. So this week, I'm going to talk about a few other things. Okay, one I'm talking about business credit score. I'm going to talk about the SBSS score, and I'm going to talk about the myths of no personal guarantee. Okay, I think I can cover that. If I have time, I'll cover business credit cards that aren't business credit cards. Okay, so there's a lot of confusion out there. I'm doing a series, and it might be 4 to 6 different weeks of the series because I want you guys to understand. I want this information to be out there so you know the right information and you stop getting disappointed, getting your hopes up, and getting turned down because you don't have all these I's dotted and these T's crossed and these boxes checked. Okay, so let's get into it. All right, all right. Lenders do not. Well, let me say it like this: pulling credit reports costs lenders money. Without spending any money, a business lender's computer can scan about 150 data points, okay, in your business in seconds. Now, the people who are putting your business stuff in, they're not making the decision. This is all built-in algorithms that the bank heads, presidents, leadership have already predetermined what to look for in approval or denial, right? And usually the person that you're talking to does not even know what those requirements are. All they're seeing is the computer says approved or denied. And then they're not obligated to tell you why they deny you. And even that employee that you may be speaking to, even the business branch manager, they might not have any information about why you decline. Okay, so but hear me out. So you got 150 data points that they can check in seconds. This will instantly let them see if your business has the 4 legs to become bankable or being bankable. If not, while you may still get approved, the amount will be much lower, the term will be much shorter, and the rate will be much higher. Okay, and you remain unbankable. Okay, we're talking about you're unbankable at this time, and that won't change until you institute the four legs to the bankable profile. Okay, excuse me. So business credit score approvals. Okay, the reality is cash business lenders do not use business credit scores, nor do even use business credit reports as a standalone factor for approvals. Okay, all they're looking at is your personal credit and your business finances, usually. Okay, this is non-bankable or alternative financing for your business. This means that just having great business credit scores will not get your business approved for working capital cash type loans. Business cash lenders, such as banks, credit unions, SBA, large fintech lenders, will use business credit to decline your business, and they will also use your business credit to determine the amount, the rate, the term of your funding offer. But they will not approve based solely on business credit. That's not real. That's not real. Okay. So get that out of your head. Okay. You got bad credit, you're going to get a high interest loan, business loan. All right. Simple as that. Simple as that. Okay. This will change if your business is more than 3 years old and exceeds 5 million in gross annual revenue. But this is not your typical small business, right? If you're doing more than 5 million a year, you've been in business more than 3 years, you can walk into a bank and get what you want. You don't need to come to me. Okay. So we're most of us are small business owners. We might be doing even a couple $100,000 a month or a year or what have you, but you still need to have all the ducks. You got to have all your ducks in a row. You got to have all your I's dotted. You got to have all your T's. Because at the end of the day, the bank is looking at the risk assessment. Okay. Because they're going to sell that paper, your loan, to the secondary market. All right. They're going to get their money back, but the secondary market is not going to buy the paper if there's too much risk in that paper. Okay. So, you need to know this before you walk in and get denied. Okay. That's the only thing I can tell you. There are thousands of business to business credit providers for every product and service imaginable. And they offer net 30, 60, 90, and 120 payment terms, with many of them making approvals based solely on business credit. So this is a whole nother factor, right? We're talking about business credit scores only approvals. Now, business credit vendors that extend net 30, net 60, net 90, net 120, or sometimes even revolving vendor cards or vendor lines of credit, right, for the products and services that you need for your business to deliver your product or service to your client. They will check your business credit score, and they can approve or deny you based on that. Now, in our software, we have the tiered, sorry, got a text message. The updated tier program, tier 1, tier 2, tier 3, tier 4. All right, the net 30 means 30 days, net 60 days, net 90 days, and 120 days. These are the net term when you have to pay the bill. They give you the product, and then you have 30 to 60 to 90, 120 days to pay that invoice. Okay, for those who may not know that. Okay, now, but this is not working capital cash. Okay, that these are just lines of credit or vendor credit cards that you can buy products from a said vendor, right? Office supplies. You got Quill, Granger, Uline, but in our software we have probably over 3,000 business credit extending vendors based off product or service. You can look for product or industry type, and there's usually 2 or 3 in each category, and some of them there's 20 different vendors Like in a food service, I think we got like 20, 25 different food service vendors that you could apply with and get a vendor account with them. Okay. And so if it's tier one, that's a startup business. So you'll get approved. There's no a lot of requirements. Tier two, there are a little bit more requirements. Three and four, and four is this top echelon where you have to have a whole plethora. Matter of fact, tier four vendor cards have the same criteria approval process as business term loans, as the SBA. You have to have so many different trade lines reporting to your business credit. You got to have low 5 bank rating score. You got to have, um, at least one trade line with a $5,000 limit or higher. So there's a number of different things that you need to have to qualify for a tier four card um, in that scenario. Okay. And then some of these vendors also will start you off on one of the net terms. All right. And then as you use, the more you use, they can roll that over into a revolving line of credit. Now, a revolving line of credit means you don't have to pay it off every month or every in those net terms. You can just pay it off when a little bit at like a regular credit card. Okay. So, but these cards cannot be used like cash. That's the point. They're only used for those specific vendors. And these are vendors that are now, as a result of the pandemic, and I imagine a lot of businesses that were struggling during the pandemic were using their vendor cards a lot more to stay in business, right? But it had a wide effect on business lending and business credit, right? And the whole kind of environment has shifted a lot post pandemic. One of those things are before the pandemic, you needed 8 trade lines reporting to qualify for a lot of things like vehicle leasing, corporate vehicle leasing, things like that, or even some other types of strong business credit score that will get you these other vendor accounts. Right now, you need 10 to 15 trade lines, 10 being a minimum to 15 to qualify for some of these larger lines of credit, these trade lines, the SBA, the term loans, the corporate only financing. So, and for the tier four cards as well. Okay. So they're all kind of in the same category and they're mirroring that same qualification requirements. All right. Hope that makes sense to everybody. Okay. There are many store and fleet cards that will approve your business solely on business credit. But there are two, you cannot pull cash off the Home Depot card. You can buy products from Home Depot, but you can't get cash. Okay. Now I'm moving into another category called the SBSS score, Small Business Scoring Service, or your Small Business FICO. Okay. Now, just like your FICO scores have become a standard for all things consumer lending for personal loans, the FICO SBSS scores have become the standard for all things business cash lending. Banks, credit unions, the SBA, and large fintech lenders are now using the FICO SBS score, SBSS score, SBSS, in their approval process. This is for your premium loan products. That's what I refer to them as premium loan products. Premium loan product is a traditional business term loan with monthly payments, low interest rates, and long periods to pay back 5, 10, 15, 20 years. Okay. You can get, if you qualify, you can get a business term loan and have 20 years to pay it off. Okay. I don't know why you would do that, but they will extend that because the bank obviously trusts you enough to extend you that term, but they're going to be making interest off that for the next 20 years. So that's why they're doing it. All right. But do you want to carry that debt for 20 years? No, you don't. Okay. You want to use these things, these tools to grow your business. That's the purpose of business credit. The other purpose of business credit is if you can get your business to that point and you have all 4 legs of the become bankable table, right? Then you can get a large SBA loan. You can get a large fintech loan or business term loan or corporate only financing, right? Where you don't have any PG because they're solely corporate only financing is the cream of the crop, what everybody wants, but nobody knows how to qualify. in the software, we outline all the qualifications for you. Okay. And one of them is your small business FICO score being a 160 or higher, right? The SBS score is not used as a standalone approval gauge as are the FICO scores for personal lending, but rather is used as a method of declining applications along with factoring into the offer, the amount, the rate, and the term. Generally, if your SBSS score is below 160, you are declined. Simple as that. And so if you apply for a business term loan with me or with anybody else and you got declined, it's because you didn't have your SBS score at a high enough above 160, or a number of other factors could contribute in that decline. Not having your 411, not having your 20 items or the compliance, not having a low 5 bank rating score, even do you $100,000 a month, not having, you know, the 10 to 15 vendor accounts, trade lines reporting, not having comparable credit, not having good personal credit. All those things can be a factor in your decline. They can decline you for whatever reason. Having a home address, a residential address instead of a commercial address can get you declined. Okay, so these are important things you need to know. Um, so what this means is that for their SBS, the FICO SBS score model method, lenders have a list of items that they can select from and assign weight, such as personal credit of up to 5 owners. If you have multiple partners, you need at least 2 or 3 with 20% more ownership to apply, be on the application for the loan. Now, if you own 50, 51%, then you can do it by yourself. But if you do have partners and you don't have 100%, like on my board, right? I got some money a few years ago, and on my board of my corporation, my brother and sister. So I had to get letters from them authorizing me to obtain financing for the company since they were on the board. Now they're just board members; they don't have any ownership, but because they are on the articles of organization, then I had to produce letters saying that yes, we authorized Jeremiah to obtain financing for the business. As simple as that. Okay. Okay. All right. See, where am I at? Where did I leave off that? Okay. So 5 owners that could make up as much as 30% of the score. The time in business, the bank rating, the web presence, the industry, the gross annual volume, the net income, the gross margins, the debt to income, and more. You got to have your debt DTI for your business under 40%. If you're over leveraged in debt, you're going to get denied because you can't service any more debt. You can't. That's the terminology we use. You can't service the debt, right? You're asking for $100,000. You make $20,000 a month. How are you going to pay it? Or you make $100,000 a month, but you got $50,000 in debt. How are you going to pay a loan for $100,000? You have to be able to show that you can handle another debt. Really? Okay. All right. All right. This means that your business FICO SBS score might be different at Wells Fargo than it is Bank of America because they're using different factors for their underwriting. Okay. So one bank might say no, another bank might say yes because they have different criteria where they want to approve you or decline you. Okay. Now we're going into the myth of no personal guarantee. Um, you heard, I typed all this out, so I'm just kind of reading off my notes. Um, you heard so much misinformation on the internet, and the big myth that is not this myth is not a non-personal guarantee business funding. While it certainly does exist for business-to-business credit lines and for store and fleet type business credit cards, when it comes to working capital, cash type funding from a bank, credit union, SBA, cash access business credit cards, Visa, MasterCard, American Express, then anyone owing 20% or more of the business will be expected to sign a personal guarantee. Okay? This requirement does not trend to go away, does not tend to go away until your business is more than 3 years old and it exceeds 5 million in annual gross volume or revenue. Okay. There are other factors such as high bank rating score, having comparable credit, having your FICO SBS score in the 200s and up range. The FICO SBS score goes from 0 to 300. Okay, so the higher your SBS score, the more likely you're going to get approved. Okay, until this happens, don't believe what YouTube scammers tell you about non-personal guarantee cash loans. All right, this is corporate financing, and the banks are not taking any necessary risk on anybody that's less than 3 years old and does less than $5 million a year. Okay, that's the simple facts. That's for corporate only financing with no PG. Okay, corporate only finance with no PG. You have to meet that criteria. Okay. Now let's talk about. Okay, I'm gonna do one more here. And next week I'll pick up and keep going because there's a lot of information. There's a lot of information. Business credit cards. There aren't business credit cards. I get this a lot. So let me school you. Okay. What small business owners don't understand is if their business is less than 3 years old or less than $1 million in annual revenue, there are no such thing as cash type business credit cards. Okay. Hold on before you shot me down. Okay. Hold on. All right. The issues of Visa, MasterCard, American Express, Discover typically do not even check your business credit scores and approve your business credit card solely based off your personal credit and personal income. So when we're getting you business credit cards and they're stacked, all right, business credit cards stacking, okay, you're PG in those cards. And some of those cards will have an inquiry. All of them will do a soft inquiry, all right? Some of them might report a hard inquiry. A lot of them will not report that business credit card to your personal credit unless you default. But my point to this is just because you got a card with your business name on it and it's not on your personal credit does not mean you didn't PG it. Simple as that, right? And on a case by case, depending on the issuing bank of that card, if you default, whether that will report to your personal credit or not. Okay, but generally speaking, they will approve you on your personal credit. You may or may not get an inquiry, but you're still personally guaranteed. Okay, and it should report to your business credit. Now, all lenders and credit card companies and vendors are not obligated to report to the business credit bureaus. Okay, they don't have to. There's no rule that they have to do that. There's none. Okay, now we do provide you a list of the of cards that do and who they report to in the software. So, yeah, we got that too. Okay. Where did I leave off that? Okay. The card is basically a personal credit card with your business name on it. And while most do not report to personal credit unless you default, and then they do, they also do not report on business credit as well. They are not actually tied legally to your business. There are still excellent resources for working capital, but to be clear about they are, this does not apply to store or fleet business credit cards, as many of those can be approved on business credit alone and can have no personal guarantee, but those cards cannot be used the same as cash. So there's a distinction, right? You got business store cards, you got fleet cards, you got vendor accounts, you got Visa, MasterCard, American Express, Discover type cards with your business name on it that can be used as cash that's going to be heavily approved based on your personal credit and your personal income. And then they'll use business income as well. So if you're an entrepreneur and you're self-employed, your business income is your income, and that's how they determine the amount they're going to approve you on. Okay. In the software, we show you how to get a secure card or secure line of credit, business line of credit, right? and then use that to piggyback off and getting other cards and other lines of credit that are not secured, that are in the business name. Okay. So there is a way to do it. And it's not, I wouldn't say it's a shortcut. It's just a method that works. And then you can rapidly get you to the um, comparable credit, right? By getting the 10 to 15 vendor cards, by getting the secured credit cards or the secure business lines of credit that report to your business credit, right? It's going to kind of leapfrog you into able getting the same type of credit cards and lines of credit that are not secured based off the secured ones. Just similar to what we do in the personal credit arena. When you're building personal credit, you get a secured card, $500. You use it responsibly, and then once that starts reporting a good payment history, you start adding on unsecured cards. Same scenario in the business arena as well. Okay, so there's those are some tips. All right, so I'm gonna stop there. I've been on 30 minutes. I have a rule that I'm not watching nothing longer than 30 minutes. So, but listen, all these things are recorded on the YouTube channels and the Facebook pages. All you gotta do is Google, Jeremiah Davis, the funding coach, and you should see all my social media. And I mean, I got on the Business Funding Now YouTube channel. I mean, there are literally 175 uh, uh, videos, lives that I've done on different topics with business credit and business funding. On the Black Label CRM, if you're interested in Black Label CRM, you can go to blacklabelcrm.com and click on the video gallery. There is a demo there, right? It shows you all the features of the software and um, as well as other tips I provide you. Okay. Um, and on the Black Label CRM YouTube channel, there's 84 videos that lives that I've posted there. So you can see the whole transition of the history of the software. And we're deploying new changes every week, every month. Um, what's coming is going to be mind blowing because it's going to have a total AI system for the coaching, for the loan processing, for the follow up. All right, we're integrating our software directly with the lenders for probably 10 to 15 different loan types, right? We got automated document collection, and then we submit those to the lenders and we get the offers back. We're building all that stuff into the software. We also are offering the white label loan processing. You can opt in for that, where we will contact your clients, close the loan, collect the documents all under your brand. Okay. And then we're going to deploy the business become bankable coaching um, in there as well. Okay. So we're making a lot of upgrades, a lot of changes, a lot of streamline. We're adding database for businesses and industry partners so you can really get the software. And we actually are employing an account managing team business to help you generate leads. Okay. And it's very reasonable because if it costs you $300 to have an account manager keep you accountable, keep you on task, $300 a month, but one client pays for it, one funded deal pays for it. So you got, I mean, literally, if you're not making, you know, quarter mil, $500,000 a year, the software with all the features that we have, and all you got to do is go out there and be the boots on the ground and generate the leads. You're going to make a ton of money. Okay. If you just fund 10 deals a month and your average commission um, is $2,000, right? That's $40,000. 10 deals, $2,000. That's $20,000 a month. 20 deals is $40,000 a month. See what I'm saying? And that's just on the first round of funding. And then we're going to upsell them to become bankable coaching, right? And our goal is to get them bankable in 4 to 6 months and then go for a second round of funding of the premium loan products. See what I'm saying? If you can get, and then we're trying to get them 250 to a $500,000 in funding, and then you're going to make commission off that. So you made a customer on the first round of funding, you're going to make commission off on the upsell of the become bankable, and you're going to make commission on the second round of funding when they are bankable on the premium loans. So you really got a lot. I mean, literally, you can get the software for $3,000. I covered your first year, and then you just go out there and get the leads, and we'll do all the work for you. I can't make it any easier than that. All right. So, anyway, like, follow, share, all those things, and go schedule an appointment. Let's have a chat. Let me answer your questions. You know, and I got financing. I got personal financing. I got business financing to purchase the software. So there's really no, reason that you can't get the software right now. Anyway, that's my time, guys. Thank you for watching. My name is Jeremiah Davis. I'm the Funding Coach. Peace.